Well, good morning, everybody. How are you today? This is Andrew Horowitz, and we're coming to you live from the new studio here at TriggerCharts. We actually call it the workbench because look behind you. It's a workbench. We're going to be talking about trading today. And again, we come to you from TriggerCharts. You can check out all the things that we have to offer over on TriggerCharts.com. Quick update. Can everybody hear me? Can everybody see me? Make sure we chat back to me and tell me what's going on so that I understand that you are, in fact, there out there. We got a pretty big audience here. And just chat me back if you can hear me okay and if you can see me okay. Testing 1, 2, 3. We'll launch a quick poll here and let me know what your particular time frame is that you prefer to trade. Am I getting... All right, great. All right, so let's take a look at the screen over here to the right, and let's talk about what's going on with markets. First of all, I want to mention, of course, this is Friday, June 21st, 2019, and some important disclaimers, disclosures, and things you need to be aware of. First of all, investing, of course, includes substantial risk. There's not a guarantee of anything that goes on investing. You lose a lot of money when you actually invest any money because there is risk and it is speculation. This is for educational purposes only, and I want to make sure that everybody understands that very clearly because we are clearly talking about some educational ideas in the area of technical analysis. So, wow, really nice size audience today. That's great. So spread the word. Make sure to tell people. We'll be here every Friday doing this, talking about the markets, talking about some of the stocks that you have. And we're going to talk about that in a little while and ask you for your particular vehicles that you want us to check out and analyze. All right, with that in mind, everybody saw this as the disclaimers. Let's talk about what's going on very quickly in this discussion. And I guess the weekly update we have to talk about that we have breakout action going on. We see that the S&P 500 reached an all-time high yesterday after excitement over the potential for a Fed rate cut is spiking pretty high. We don't see necessarily the Dow or the NASDAQ confirming those new highs. However, we do see that the Dow is at an all-time high for this year. Just for 2019, it reached its high point, as did the Qs. But we are seeing substantial action. The one thing that is a little bit concerning, if you kind of look at and want to find fault with anything, is that the small caps are not following through. Small caps usually do very well in a market where you see a lot of animal spirits and a lot of upward bias. But for whatever reason, we're not seeing that. All right, we got everybody voted. We got a couple more people that are going to be voting here on that quick poll. And I'll give you the results in a second here. We're going to end that in a moment. So if you haven't put your answer in for the poll, please do so. Let's see what else we got. So yeah, the FOMC, the Fed, what'd they do? Well, last week we talked about them captivating the ideas of investors, captivating the ideas and thoughts of those that wanted to think about that. Well, you know what? The Fed is definitely on our side here. They capitulated this week. They took out the word patient from their discussion. It was clear that they talked about that there may be a rate cut, at least that they are ready to do so. And of course, we saw Mario Draghi this week at the ECB give another one of his whatever it takes commentary, and that dropped the euro. Got a lot of lip service done in the area of the markets when it comes to the Fed. President Trump was once again commenting on this, and we know what happens there. But that is actually not a good thing, according to most Fed insiders, that he is tormenting the Fed the way he is. All right, quickly, let's give answers to the polls. What time frames do you prefer? About 33% under 10-minute bars, about 33% at daily bars, and nobody really uses 240 minutes. 240 minutes is a real favorite of the Forex traders. 60-minute bars, 22%, and 30-minute bars, 11%. Nobody uses 15-minute bars either. So 30-minute bars and 60-minute bars are my favorite to see intraday trading setups. I like to look at the longer terms as well, so kind of interesting. All right, let's close that down. Let's keep going. Yields. Well, as we talked about, yields have been dropping. We saw that the 10-year Treasury dropped below 2% for the first time in a while. Interestingly, with the comments from Mario Draghi, we saw that the German BUND dropped to 0.3% negative, on the negative side. So it's kind of interesting situation there, right? We're seeing that you could lend money and get paid for it, or I should say borrow money and get paid for it. In Norway, I think you get paid, if you get a mortgage in Norway, they pay you, the banks. How do you like that? Well, that's adding to some of the swelling bubble that is growing in some of these areas, particularly in the bond market, and that's something to be aware of. One of the things that we notice, and we'll look at the right-hand side of the screen here, that we're seeing that there is, look at this. Look at this launch after the ECB, after the Fed, this launch of the gold. We talked about this last week. We had a line in the sand about 1342. Remember that? We said if it got above that, there's a good chance that gold's going to break out. And we talked about the gold miners and how they played. We'll talk about that in a second also. So getting back to where we are here on our quick update here. In economic news, regional manufacturing slowed. Yeah, that's an issue. That's another warning sign. Something's going on. We talk about this a lot in our inside here, talking about, you know, what are the things that can derail the economy? What are the things that could derail the stock market? It looks like nothing can derail the stock market. But geopolitical issues, definitely check mark on that. You have the potential for economic numbers. You know, you have that going on. And I think that when we look at this and we think about what is the most logical thing that we have to really pay attention to, I believe it is geopolitical. And when you look at the geopolitical situation right now, it is very tense, especially what happened in Iran, whether they shot down the drone by accident, unintentionally, intentionally, we're going to war, we're not going to war. Overnight, all sorts of action transpired. And that's why we're seeing that the Dow futures now down 65, the S&P 500 mini futures down 9.25, and the Qs down 32.5. By the way, I want to mention to you, or ask you, does everybody know that you could actually trade micro minis or micro S&P futures right now? There is a symbol, it's about 1/10. You can actually trade with a lot less money in. So anybody that had the margin issues, or maybe they didn't want to trade a large component of the S&P minis, you can actually trade micros right now. So check those out. I want to show you this chart here. It's kind of interesting. Check this out. Manufacturing and business conditions. So again, this is not technical analysis. What we're really talking about, okay, let's get a grip on what's the backdrop of what's happening. Right here, we see this big drop here, and that's probably because of the pull forward effect that happened recently, where we saw that ahead of tariffs, there was a lot of buying and factory orders that were really ramping up, inventory builds ahead of the fact that, you know what, if I'm a business, I don't want to pay for the high costs of those tariffs that possibly be coming in the future. Therefore, what am I going to do? So if you're a business, what are you going to do if you know that there are actually these extraneous fees that are going to be possibly pushing on your cost factors when you're doing some manufacturing? Well, you're probably going to buy as much as you can ahead of any increase in tariffs, making sure that you're set and you know your cost structure for your manufacturing process. Well, right here, what we're seeing is that fall off that we anticipated, because a lot of people front loaded or pulled forward their actual manufacturing inventory builds and the factory orders. And what we're seeing right now is the three levels, the Fed from Philly, the Richmond Fed, and the Empire manufacturing business conditions all are slowing precipitously. You can see that coming down pretty hard right now. So this geopolitical issue is something that we're really looking at. But next week, we're also looking at the Case-Shiller housing index. Housing has been doing a little bit better as rates have been coming down. This will be the 20-city index on Tuesday. Also, consumer confidence on Tuesday. Durable goods later in the week. And GDP, the third revision to GDP that will be coming out. I had an interesting meeting this week. I spent some time with Ben Bernanke, former Fed chair Ben Bernanke, over at a meeting. There was about, I don't know, 50 people in the room, and he spoke for about an hour. If you see us on Twitter, I showed a picture of he and I. But he had some of the same discussions that we're talking about. This geopolitical issue is probably a bigger issue that we're not thinking about. But also GDP, looking at GDP probably dipping down to the 1% rate next week or next quarter, and throughout the rest of this year, actually. Theme for this week, the race is on. Yes, we have the G20 meeting that's going to be coming up. And by all accounts, there's going to be some deliberation between the Chinese and U.S. delegates and President Trump and President Xi. Right now, we have a 100, listen to this, 100% chance of a rate cut based on Fed futures. The probability is 100% by July, next meeting. Oil prices have been ramping. It's something to be watching for. I would watch for a reversal right here as some of the tough talk is tempered. I think that we'll see that. And what else do we need? Oh, we're going to talk about earnings on U.S. Steel, Adobe, and stocks of interest and futures. We'll see gold, BYND, Microsoft, and CCL. So why don't we get right to that and look at that here. Let's see. All right. Let's get into this. Everybody can see the screen okay? Just give me a quick tick back to make sure everybody's still awake and you're having your coffee, your Red Bull, or whatever else you're doing. I want to hear, start putting in some of your stocks that you want us to look at, some of the symbols you want to look at. Let's talk about the E-mini futures, down about 8.2 right now. And what we're seeing is that after yesterday with that announcement of, oh, maybe we're going to strike Iran. Maybe we're not. Maybe we are. Maybe we're not. We'll see. Markets came down yesterday. We can see that move right about here. Let me kind of bring on all the drawing tools so we can see what's going on. So we see that there is this big move down that happened midday yesterday. And then it popped right back up, and then a kind of a sideways action right here. Clearly, on the daily chart, we're seeing that there is a significant potential for a continuation of the breakout right now. We look a little bit lofty here, but okay, that's fine. We could deal with that at this moment. What do we have here? The NQs. And when it comes to the NQs, we are also looking at the potential for a breakout here. But again, here's something interesting that I want to share with you. I'm going to zoom in on this right now. We're going to kind of focus in on this. There's definitely some resistance right there. Look at that. I always talk about this. Always talk about drawing a quick line, taking that line tool, drawing a line, and let's see where we land on this. Well, if we kind of go backwards and look at this a little bit, there's nothing really to the left, but really there's a top end level, probably around this all-time high from last time. And that's pretty much where we stopped yesterday. The last couple of days, we actually stopped there on that. So use your drawing tools. Let's take off. I want to take off this radar here. This is all part of the Commander series. This bottom part here is called aileron. That's a momentum indicator. We culminate about, I would say about, right now we're about 14 different indicators. Some proprietary, some that have been used before. We use a variety of things to come up with a momentum index and then look for overbought, oversold levels right here. If you look at this, we have a lot of green, and that's a good sign. We cross back over the zero line, and that's a good thing to be looking for. And you can see that when we find that both we are seeing red in the area of the altimeter and the autopilot, where that is showing us in a signal, clearly a red is sell or short, green is buy or long. We get yellow signals on alerts. Very easy to look at, red, green, and yellow. By the way, you can get more information about this. Yeah, I need an hour for this. Thanks, Woody. You can find out more information about this on TriggerCharts.com over at the TradeStation Trading App Store. By the way, we are the #1 highest rated for good reason, I think. So you can get a 10-day free trial of all of this over at the Trading App Store. So you can check that out too. But, you know, we're seeing some breakout. One of the things that's kind of interesting is we're seeing gold. Look at gold. I mean, gold is, we're seeing it flash on the top here, long alert on the 60-minute, long on the 30-minute for 2 bars. You see this right here? And we're seeing, I want to highlight this whole area here for you, right here. Look at that bar right there. So what we're looking at is gold on the radar screen, multi-time frame radar screen for Commander series. And what we're seeing is that 2 bars, and there's a profit because it's coming down a little bit. It will give you kind of where we are in this. There's a long alert on a 240-minute. There's a long for 4 bars over on right here for 4 bars over on the daily, and the weekly is showing us also a long. So what I like to look at is, again, I always like to do this. I like to very simply look at a right to left. That's how I look at things, right to left, right to left. I'll say it again, right to left. And the reason why I do this, I want to see the longer term time frames and really how we are looking from the aspect of the overriding trade longer term, and then break it down to a shorter trade. So right now, here's what I can tell you. So there's my feeling on gold when I look at this. So again, when we look at this, this is very simple to look at. And I'm going to kind of just show you a couple of things that probably are smart and to think about. So I know, okay, I am long for 3 bars on a weekly. That's pretty good. Long for 4 bars on a daily. Okay, I'm getting some long alerts here. So what I can tell you is that on a short-term trade, the bias is to the upside. Now, when I go look at my chart, this is a chart that we put together last week. Remember this? So let's take a look at this because I think this is interesting. I'm going to make this a little bit bigger for everybody to see here. Last week, we talked about these levels. we said, hey, look right here. Look at these levels right about here. I said, you know, right about here, when we look at this, we have the opportunity for, if it to go above these levels right here, and we drew this line, that the potential was that we were going to see a breakout. And look what happened here. I mean, an incredible breakout. That's exactly what happened there. So we identified that two things. First, we identified that when we looked at this particular chart, we identified an area of a hole. There was nothing here on the bottom side, right over here. We identified that if we got past this area, when we looked from right to left again, this whole area on top, there was a hole. So what we thought would happen was that price would move very fast through time. And that's the important thing. So what we have over here is this consolidation where price moves horizontally, slowly through time. And we get a break. And we got that signal right there at about 1345. You can see the signal right there, 1345. And now we're trading at 1415. That's about an $80 profit on gold. Not too bad. Now, at the same time we look at this, we could probably pull up GDX for a minute. Look how well that's done. This is the same kind of chart, the same exact situation. We could draw the same lines that are going on here. So we see that we have some connecting lines from right to left, probably right about, I would say there's a range here, but right about there, there's a connecting line. Once we got above the level of interest right here, there was a long position, long bias called. And what happened there? Well, it simply moved up and broke up. So you got a long bias call to go long. That's what that signal is on a daily for $23.12. Currently trading at $25 right now. Not a bad trade. So if you're watching this, and if you don't trade gold, you don't like gold, and you say, you know, that's not something that I really do a lot. That's just not something that I really play with. Okay, that's fine. You don't have to trade futures. You could trade the GLD. Exact same look on GLD. This is pretty much a replication of gold to a degree. So GLD did the same thing. We broke out at 126 and now at 131. Now the gold at GC trades 24 hours essentially because of the future. So it's a little bit better to play that. I would have played the GDX. Or if you're really excited about things, you can play something like a JNUG. And you got that breakout at 922, which is 1136. That's $2. That's like 20% upside from where the breakout was. And you got a few of these that really worked on that. So that's one of them. That's the gold miners. That's the junior gold miners. So there's other ones. The other miners have triples too. So you can take a look at that. Let's keep on going through here. But basically what I want to really get across to here is the ease of using this. You know, you can see the shorts that came in right about here. And you look at this, and when we find that there is these opportunity zones, if you will, when there is these shorts that we find, or these long position that we're finding here, you know, and you see that when you look, again, very simple. It's very simple. That's the whole point. I'm a simple guy. I wanted to make this simple for me to use. I looked from right to left. And when I looked over this region here, and I found in this whole section, and I'm going to kind of really muck this up right now and put on a pretty big level. I mean, look at this. There is really, in this area, there was nothing. There was blank going back multiple months. So that move horizontal through time on the downside was very sharp and very fast. That's all you have to do is look for holes, look for breakout opportunities, look for consolidations, sometimes the thinning of an altimeter where we see that there's a very thin altimeter versus a very wide altimeter. Those are the things we want to look at. All of this, by the way, is available in our training guides. It's also available, special offer alert. Everybody pay attention to this. This is going to be kind of interesting. You got to listen. Everybody that subscribes to any of these indicators on TradeStation, as of now, any new subscribers to the Commander series, you can go over to TradeStation, go to the App Store if you have TradeStation. Anybody that subscribes to the Commander series will get a 4-hour online tutorial, kind of a coaching class that goes through all of the in-depth understanding of market profile, as well as a lot of technical analysis. So we put that together as an evergreen piece so everybody can look at that. So if you do subscribe, make sure to tell us, and we'll give you the links and the keys to get into that online site and online video for your information. Gosh, what a great group today. A lot of people here today. That's awesome. All right, let's go back to this. Again, put in your, I'll bring your attention over here. I'll say over here, send me your stocks or send me your symbols. All right. All right. Here's the, by the way, MES, just to let you know, see that MES? See the micro E-mini futures, you see that? The micro E-mini futures right here. I'm gonna draw your attention to that. So you can trade that, and they trade in tandem with the S&P futures, but at a much reduced cost factor to get in margin. All right, let's see what else we got here. And there's also Q, MNQ. See that, MNQ? MNQ is the Qs, obviously. All right, a couple of stocks of interest. DocuSign is interesting. DocuSign, I want to show you this on clearly a nice break. Well, let's go backwards here and kind of show you this. DocuSign came out with earnings, and actually the earnings are pretty good. However, one of the things that happened with DocuSign is that some of their billing issues were questionable and some issues. Stock dropped right about here on the earnings from what about 54 down to, it went to overnight, it was like a 42. Came back up and started ramping. This was a really good play right here. Now, there wasn't essentially any breakout opportunities until we got to about 50, but currently trading at about 54. Where do we have to go here? So let's look at this. I'm asking everybody, and do me a favor for the sake of time, chime in on this one quickly, okay? What I want you to do is tell me where you see on this chart the potential for the next breakout where you really want to get interested in looking at this stock. What would you do here? What price? Okay. A few more people. Yep. Okay. So, all right. So let's see what, So a couple of people put in 58, 56 half. So let's look at this. I would look at this honestly, above this level, this 56 and change level. And why I say that is because once again, we're going to put a quick line in here, right there. Well, a little bit higher than that. All right, about there. So what do we got? About 56.73 is where I'd get really interested in this, because right now what you have is really nothing to the left, a couple little nubs right here. But again, you just see nothing really above that. Think of this like kind of a haircut where you pull the hair up and you snip that excess. There's really nothing right above here, not too much. Clearly, you need to get beyond the level of about 58.45, but 56.73, give or take, is an area that I would really be looking at getting interested in. On the aileron, again, this is separate from the Commander series, it's an add-on, but on the aileron, look at that, it's starting to peak up here a little bit, and that's a good thing because we're seeing the momentum all of a sudden switch back to a positive level. Something to kind of just look at right there. Upwork. Upwork's interesting also. So one of the things I know about Upwork, we use this as a provider for some of the things that we do. One of the things they just did was just increase their pricing on the take that they get from when we pay the contractors. So they upped it by about 0.5%, not a lot, but still they're looking to maximize things. It was up about 3% yesterday on this. And what I'm looking at here is right about this level here. I know this is not exactly a great looking chart, but this is not a great looking chart. Let's just get that straight. However, there has been a desire to get in on a reversionary trade. We're seeing that there is some upward action and a change of overall levels when it comes to the aileron, so that's good. But one of the things that I'm looking at here, and let me kind of show you this. I'm not convinced entirely just yet, but this area here where there's nothing, if you can kind of clear this, and there's only about 10 days or so, there was some action below that area before it dropped off very significantly after earnings. If we can kind of clear this area and get above, I would say, let's see, where would I say this would be? If we can get above this area, I would say right here. If we can get above about 1630, there's some interest there, because then you have probably the opportunity up to about 1779 or so before there's maybe some resistance, and that's not even good resistance as I see it. So kind of interesting. Beyond Vile, this is, I don't even know what to say about this. I tried to get a short on this the other day. I couldn't get a short. I tried to get a short up here, probably about the 190 level. There was no shorts available. Right now trading at 153, probably has some support back down about the 120 level. This is not something I would touch. Bad news came out for the stock last night. Potential pesticides and herbicides and all sorts of things on that. Let's see what else. Crude oil. Interesting. Let's look at this on a shorter term time frame. So this is a 30 minute. Let's kind of focus in on this 30-minute here. You can see very easily where there is more action on the shorter term time frames. There's more potential for ins and outs on that. So, you know, you would have got in here at about 54.31, 54.60, 30 cents. You got a little bit of break here. You had a little bit of an advanced opportunity at 54.91. You moved out of it at about 55.45, and it's been tracking higher. Clearly, oil's been tracking higher. I would look for a reversal. And if we do see a reversal here, potentially going into the weekend, probably there's going to be some strength because who knows what's going to happen here. I would expect to see strength probably in oil, maybe in gold before the close of business today on Friday, going into the weekend, as we don't know what's going to happen over the weekend. A lot of things are usually announced over the weekend, and potentially a little bit of weakness in the S&P after that nice run that we've seen and the equity markets itself. However, you need to look at kind of this area here down to about 55 again. So where we're trading at right now, 57.24. It doesn't look really great, and you can see a quick drop there. I would say that, you know, right here, if we look at this level, about $56, that's a good support level. Clearly better support level right about here at about 55.75. Now that's on a 30-minute chart. Okay, so let's get that straight. That's on a 30-minute chart. When we look at the daily chart, there's another whole story that kind of comes out here. So we saw that this big move. Now remember, why this big move happened? Well, we talked about this last week, that if you can get above this 54.53, and I've been looking at this, there's a good opportunity. Why? Once again, I'm going to kind of really pump this right to you and make sure you're clear about this. There was a lot of, look at this. There's a hole here. See that? Big hole of nothingness right there. Now, when we continue it back, there are some resistance points that we can look at. Clear right here, and we look at this, resistance point probably comes in right at about 56.80. Now, with that in mind, would I be a buyer or a seller? Would you be a buyer or a seller of oil at these levels right here? So a really nice basing going on right here back in the beginning of June, 51.75, couldn't get below that 51 level or so. And then we saw that move up. A lot of it's on geopolitical worries, and that's a big concern. So when you look at this right now, I will tell you, let me just read my results here. Yeah. Mixed. So I would say that I would be a potential buyer of gold, but buyer of oil, but at about 58.90, all bets are off. I would think that we get some kind of a stop there. And probably if the geopolitical deal kind of cools down, back down to 53, because we have a lot of supply issues right there. All right, a couple of stocks that you asked me about. We'll talk about CCL for a second. Stock is in the doghouse. This is Carnival Cruise Lines. You got to look at also RCL, Royal Caribbean Cruise Lines. Dropping about a little bit less, a lot stronger stock, but Carnival Cruise Lines, their earnings, everything's not looking good. Of course, the whole Cuba, the disallowance of any Cuba travel is hurting them. We saw U.S. Steel pick up really nicely off that base. I picked up some shares down here. There is some resistance up about 1564, looking to possibly, if it doesn't fall through at this point, drop this. Adobe came out last night with earnings, all-time high on Adobe, pretty cool. AOBC is a name that somebody asked me about. Wow, look at that. Outdoor Brands, the gun company. Yeah, look at this. If you got to get above here, and you're doing great. So if this does, in fact, follow through, and, of course, guns went up because of the whole aspect of potentially a war. That's what we were thinking about yesterday with Iran. There's some other news also. But basically, you got to get above this level of about $10. Let's see exactly what this level is real quickly. I would say 1021. And then you got a great shot. Why? Again, I'm looking from right to left, right? I'm looking from right to left. And what do I see inside of this? It's very easy, right? I see that there is a hole in this area right here. So the opportunity to move up to about $12 is very high if we can get a short squeeze going on with this. What else do we have? Let's see if we have anybody else here. GE. Click that. GE. I'll mention also this recording will be available on TriggerCharts.com later today, and follow us on our YouTube channel. Also, get your free 10-day free trial or subscribe to the TriggerCharts Commander Series Aileron. There's the KRI. Oh, I want to show you the KRI indicator. Let's see if I can bring that up real quickly. Let's see, open workspace. Do I have it here? Yeah, I want to see what this is right now. SPY's moving down pretty good here. KRI came up pretty high, up to a +4 yesterday. Look at that right there. You see that right there? And we see that markets are overbought. We saw that right there. See that cluster that formed right here? That's an interesting area. Actually, this is not trading down 57 basis points. There was a dividend that passed through. So it's only probably trading down about 15 basis points right now, in line with the futures. So there's a dividend pass through right now, and it has to be adjusted shortly. So you'll see that tomorrow get adjusted. But we did see an overbought situation yesterday. This is very easy to look at. This is a very easy situation to really peg. It does one thing, and this does one thing well, the KRI indicator. The KRI indicator, key reversal indicator, again, over on TriggerCharts, the bottom line on this is that you can easily understand what is the pulse of the markets. You can see that there was a great opportunity in June to buy. I want to show you the greatest of all calls. There was a massive back up the truck and buy back in December. So let's see, close window. So you can see this back in December. There was you don't get these that often. That was a back up the truck and buy. Get some overbought situations where you want to lighten up on positions when you get these clusters where we are right now. You get a cluster on the low. Again, called it perfectly. I mean, look at this. Look at this. I'm going to do this here. Look at that. We'll see how that works. This one was a great one. All these tops are being called pretty well. The bottoms are being called pretty well. Look at that. Again, they may be intermediate term, and if things change, you have to adjust to it. Maybe it's just a few-day trade, but the big ones that you want to look at, this one right here, this is just, I mean, hearts everywhere on that, right? So there you go. Again, I'll mention you go over to TriggerCharts.com. I think we covered everything today, and I want to thank you for joining me. We'll be here next Friday. Tell your friends, do me a favor, send the registration form over to some friends, some people that you know that trade. I'd appreciate it. And we'll see you again next week. Thanks so much.